Now, the ACCC is setting its sights on this proposed acquisition of APA Group, the Aussie Energy Infrastructure Group, receiving a $13 billion takeover offer from the Hong Kong-based consortium of power, utility and infrastructure companies, CK Infrastructure. It made an all-cash offer of $11 a share for APA, as we can see from the graphic there. The shares ended today at $10. The company's share price spiked on news of the acquisition, but it came down a bit lower, but it still was up almost 21%. The competition watchdog announced this morning that it will carry out a public review of the bid. Experts tip that may take some time.
The problem with gas assets is they are so political. You know, we've got a toxic environment in terms of energy prices in Australia.
Especially right now, right?
Right now, we're in the midst of winter as well. You know, energy prices are very prescient on people's minds at the moment. They're front and centre. So, you know, we've got a government that is very keen to ensure that prices come down. And here you've got an overseas investor looking to buy a key infrastructure asset in the transmission of gas. That is going to get political, and it's just going to be kicked around for the next 3 to 6 months at least. So, you know, if you can get 10-10, 10-20, walk, well, run, don't walk.
Well, for more on APA and other issues, Julia Lee from Bell Direct joins me now live from Sydney. Julia, great to see you. Now, let's talk about the APA, the takeover offer. It really has been very interesting. And the ACCC, it's got to get through those regulatory hurdles and also FIRB. And, I mean, I don't, you know, I've spoken to just a number of people in the last hour or so on this program, on this network, and they don't seem to give it a huge chance of success.
I guess the first thing is that we've seen a number of takeovers hit the market in 2018, and great to see 2 takeover bids today. One, as you mentioned, Helen, for APA Group, and the other one for Gateway Lifestyle. And I guess the thing with these takeovers is that some of these assets have been under a little bit of pressure. If we have a look at APA Group, that's down 11% in the last 52 weeks before today's trade. And also Gateway is down 11% over the last 52 weeks. And I guess that's a problem when you start to see assets under pressure, that they do become a more attractive takeover play. APA, as you mentioned, I think the biggest risk is FIRB. CKI already has assets in Victoria, South Australia, and it of course acquired Duet Group back in 2017 as well. But he would know some of the risks involved in investing in Australia. It was unsuccessful in its bid for both Ausgrid as well as Transgrid. But given that more than half of the gas that's transmitted in Australia goes through APA's pipeline network, I think there's a pretty high regulatory risk of getting through FIRB here. But it's pretty amazing to see APA share price hit $10 today as well. It wasn't too long ago that we saw this company doing a capital raising. In fact, I think it was February this year at $7.70. So to see its shares hitting $10 on the back of an $11 takeover bid is pretty nice to see for shareholders.
Yeah, no, it's quite extraordinary. So would you say to shareholders, are you sort of saying, well, look, I mean, you know, yes, you probably should have taken some of that $10 today or a little bit higher and then sit and see what might happen?
I think that with this one, because the risk is so high of getting through FIRB, I'd prefer to take my run or at least cash in half of my holdings at this price. It is quite a significant premium to the last traded price. I don't think this is going to be a deal that's wrapped in a month or two, and it'll probably end up lasting the best part of a year. And if it does get through the ACCC, we'll have to see CKI seeing some divestments of assets as well. So it looks like it's going to be a pretty messy one, and I guess that's why the shares are trading at a discount to that $11 bid price. So it's going to be interesting, especially given I guess the government coming out to say that it will be clamping down on critical infrastructure assets here in Australia. So I think this is going to be a big test for overseas investors who are interested in investing into Australian infrastructure assets, given the clampdown that was signalled back in February this year.
Well, it's interesting, you know, you say, I mean, they did get knocked back with Ausgrid. That was now, what, less than 2 years ago. Scott Morrison did jump in there, Julia. I mean, but they've come back for more. So they obviously think they're, you know, in with a good chance, but perhaps they think the price is going to be very enticing. But I would have thought this critical infrastructure on gas supplies, national security, all that sort of thing, energy security, it probably is not going to get up.
Well, given that they were successful in terms of Duet Group and they already have infrastructure assets here in Australia, you'd expect them to already be talking to FIRB. So I guess that conversation would have already started and they'd have a pretty good idea of whether they were going to be successful or not. But I think this is a real litmus test for overseas investors who are interested in Australian assets. Back in February, we heard not only would there be, I guess, a new office to look at critical infrastructure at the early stages of a potential sale to help in that process, but also a clampdown on agricultural assets, so large pieces of agricultural land that they would have to be offered to domestic investors first before approval to an overseas investor. So given, I guess, a bit more of a clampdown on some of these overseas investments, this is going to be a huge test, especially given the level of M&A that we are seeing around the globe at the moment, not only here in Australia.
Well, Julia, just the Gateway takeover, what's your view of that offer?
Gateway is an interesting one. Look, this is a company that last month came out with a profit warning, and it's an interesting one because, like a lot of property companies here in Australia, there's a rental component to its business where it collects rent like a landlord, and then there's a development business to it as well. And I guess if you have a look at the land lease community here in Australia, the big players are Gateway, Hometown, as well as Ingenua, which is also listed on the market. Look, in terms of the offer, it is quite an attractive offer, $2.10. The shares last traded at $1.83, and if you have a look at the net tangible assets, they're at $1.52. So they are at a premium there, and given that the company downgraded on the 2nd of May, you could say maybe it's a bit opportunistic. Look, that downgrade back in May was due to the settlement of some of their primary residence sales. But look, I think it really, I guess it really does highlight how aggressive Hometown is being here in Australia. Its parent company, of course, is a US business. They've only been here in Australia for the last couple of years, so it does look like they're aggressively looking at this growth market in terms of these communities, especially these resort-style communities for the older generation looking at retirement.
Yeah. All right, Julia Lee, thank you so much for that from Bell Direct.